Today, we're diving into Bitcoin, but maybe not in the way you'd expect. We're going to peel back the layers and look at a hidden force, a sort of global money tide that might be the real driver behind not just crypto, but, well, everything. Let's start with this chart. It's got a pretty big clue. Okay, so you look at this, and what do you see? A pretty standard price chart, right? You've got your ups, your downs, all those candlesticks telling a story of buyers and sellers. But here's the thing. There's another story being told here, one that's hiding in plain sight, and it has a huge impact on what you're seeing. And what's really wild is that the most important clue on this entire chart, it's not the Bitcoin price. Nope, it's something else entirely. Okay, so let's tackle the first piece of this puzzle, the price itself. For a second, let's just ignore everything else and zoom in on that top half of the chart. What's it telling us? So here we are, looking at Bitcoin's price. See that red line? The price comes crashing down, taps it, and then boing, bounces right off of it, almost like it hit a trampoline. This is exactly what traders call a strong support level. And get this, that support level isn't some nice round number. According to this chart, it's this super specific number, $82,307.25. Kind of weird, right? So that's the million-dollar question, isn't it? Why that number? Why did a flood of buyers suddenly jump in right at that exact point and push the price back up? Is it just some random line on a chart, or is there something bigger going on here? To figure that out, we have to look at the other half of our chart. All right, let's dive into part 2 of this mystery. It's time to finally talk about that yellow line at the bottom of the chart. And trust me, this is where it all starts to click. So, that yellow line represents something called global liquidity. Now, I know that sounds super technical and maybe a little boring, but stick with me. Think of it like this. It's basically the total amount of cash swimming around the entire world, just looking for a place to go, somewhere to be invested, in stocks, real estate, or, crypto. And the specific measuring stick we're using here is the M2 Global Liquidity Index. This isn't just some obscure metric. Economists and the big money investors watch this thing like a hawk. Why? Because it tells them how much fuel is in the tank for the entire global economy. Okay, so we've got our two main clues, the Bitcoin price bounce and this global liquidity index. Now for the fun part, the aha moment. Let's put these two pieces back together and look at the whole picture. Okay, now look at this. See what happens when we lay them on top of each other. Just look at the general trends. When that yellow line, global liquidity, goes up, the overall trend for Bitcoin seems to go up too. And when liquidity flattens out or drops, Bitcoin often starts to feel the squeeze. Now, it's not a perfect, exact match day by day, but that broad connection, it's really hard to ignore. So why on earth would this be happening? Well, there are a few pretty solid reasons. First off, it's just basic supply and demand, right? If there's more money floating around the system, all that cash is chasing a limited supply of things to buy, and that pushes prices up. Simple. Second, when central banks are printing more money, some investors get nervous about their dollars losing value. So they buy assets like Bitcoin as a hedge against inflation. And finally, when money is cheap and easy to get, people just feel a little bolder, They're more willing to take bigger risks on their investments. So let's bring this all home. What's the big takeaway here? What does this connection really mean for how we should think about the market? It really comes down to two totally different economic worlds. In one world, you have high liquidity. That's our river of money flowing freely. It's plentiful, it's cheap to borrow, and it encourages people to invest and take risks. And that tends to give asset prices a big boost. But on the flip side, you've got low liquidity. That river starts to dry up. Money gets tight, it's harder to get, and people get more cautious, they start saving instead of spending, and that puts a whole lot of downward pressure on those same asset prices. So here's the bottom line. While we all get caught up in the daily news, the latest tweet, or the new project for an asset like Bitcoin, there are these massive, almost invisible forces at play. These huge macroeconomic tides, like the flow of global money, might just be the real puppet masters pulling the strings. It kind of challenges that whole idea that Bitcoin just exists in its own little world. It suggests that if you really want to understand where it's going, you might need to watch what the world's central banks are doing just as closely as you watch the crypto headlines. And that leaves us with one last big question to think about. If global money flow really is this powerful tide in the financial ocean, are all of our investments, Bitcoins, stocks, you name it, are they all just boats, simply being lifted up and down by these huge currents that we can't even see? Something to think about. Thanks for tuning in.